how did indirect tax work pre-GST? And then we'll ask the question, what has changed with regard to GST? Okay, so we are going to still, in a way, come at a point in which we'll understand how the GST works. Okay, so who's the first person paying GST to government? Is it raw material supplier or the finished producer? The raw material supplier upon the raw material, the finished producer on the finished product. There is a value which gets added when the raw material is processed into the finished product. So for example, let's say if I buy 5 kgs of cotton to produce a textile out of it, then I am paying GST upon the, what you can say, 5 kgs of cotton when I'm buying it from a supplier of cotton, right? And he has already paid the GST to the government of India. So this is done over here. So at this point of time, I'm a consumer. And then when I produce the textile out of it, while I'm selling the textile to the market or to the distributor, I will pay a GST to the government and I will recover it from the distributor who will pay it to me. So I will bill it to the distributor will bill it to the retailer will bill it to the customer. Finally, the person who's paying the GST is the customer. He's the final end product from which the GST is recovered. But there's a line of chain of actions which moves in terms of recovering that GST, right? So the taxpayer finally is the one who's paying the government, but he is not the one who's paying it directly. He's paying it indirectly. This is how the indirect taxation regime works out, class. Am I clear now? Okay, now the question that we're asking is, how did indirect tax work pre-GST, right? Or in fact, let me just kind of give you a little bit of an addition to this. How did interstate commerce indirect tax work pre-GST? मतलब interstate commerce के बीच में जो एक मतलब taxation structure लगाया जाएगा, if you have a interstate commerce activity which is happening over here, how did that work pre-GST? That is basically the question that we're trying to ask. ठीक है, आप समझिएगा इस बात को, प्लीज क्लास ध्यान से दीजिएगा. GST का करंट अपडेट्स आए हुए हैं बाहर, इस पे क्वेश्चन आ सकते हैं, थोड़ा ध्यान दीजिएगा, कुछ हो सकता है सॉल्व कर पाए आप लोग इस चीज के साथ. ठीक है, मान के चलिए, लेट्स इमेजिन फॉर एग्जांपल दैट it is a state of Karnataka. Okay, state of Karnataka here is, let's say, producing, let's say, coconut water. स्टेट ऑफ कर्नाटका कोकोनट वाटर प्रोड्यूस कर रहा है. ठीक है, तो मान के चलिए स्टेट ऑफ कर्नाटका ने कोकोनट वाटर्स प्रोड्यूस करे, या कोकोनट मतलब नारियल पानी के नारियल प्रोड्यूस करे बहुत सारे, और फिर लेट्स से मान के चलिए कि स्टेट ऑफ उत्तर प्रदेश State of Karnataka is producing a lot of coconut water, clear? And in addition to that, state of UP is importing all these coconut waters. Imported by the state of UP. Clear? Now let's say, for example, if one, let's say, box of coconut water comes for 100 rupees, and let's say it has 8% GST. The question that I'm asking to you is this. First question. Who's the person eventually paying the GST Option number A, is it a person from the state of Uttar Pradesh? Option number B, is it a person from the state of Karnataka? These are two questions that I'm asking class. Please tell a sense of this, yes or no, right or wrong, correct or incorrect. You're getting my question over here? If the state of Karnataka is producing coconut water and state of Karnataka is exporting that coconut water to the state of Uttar Pradesh, let's say one bottle of coconut water is sold for 100 rupees in the state of Uttar Pradesh, let's say for example the city of Lucknow, and the state of Uttar Pradesh, let's say someone is purchasing 100 rupees worth of bottle, 8% GST is paid upon that bottle, let's imagine. So the total price is 100 plus 8, which is 108 rupees. Okay, am I clear? Then the question that I'm trying to ask is, who is the person eventually paying the GST? मतलब जो व्यक्ति GST eventually pay कर रहा है वो क्या है? इसका आंसर बताइए क्लास एक बार प्लीज. Class, who's paying the GST? Which person among these A and B is paying the GST? Class, tell me the answer please. ठीक है, चलिए ये वाला आंसर तो आपने दे दिया कि यहाँ पर अगर हम देखते हैं, if the production of a particular material is happening in Karnataka and it is being consumed in the state of Uttar Pradesh, eventually it is the citizen of Uttar Pradesh who is paying the GST. ठीक है, तो जो GST पे कर रहा है वो सिटीजन ऑफ उत्तर प्रदेश है. ये बात तो मैं आपकी मान गया, चलिए बिल्कुल सही बात. अब इस प्रश्न का उत्तर दीजिए, पॉइंट नंबर बी, इसका बताइए. चलिए, लेट मी जस्ट चेंज द अरेंजमेंट ऑफ इट. आई राइट X इज यूपी एंड Y इज कर्नाटका. बताइए, what is the correct answer? What do you think should be the correct answer? Use your own logic and try to see the question as it is, that if a state of Karnataka is getting to export its coconuts to Uttar Pradesh, surely 100 rupees are being taken by the state of Karnataka. So you have a kind of a trade between the state, interstate trade I am talking about. The state of Karnataka is purchasing, is selling coconuts to the state of Uttar Pradesh, and the state of Uttar Pradesh is purchasing the coconuts from the state of Karnataka. 100 rupees are coming to Karnataka. That is the income that Karnataka is making. That is a trade that is happening between state of UP and state of Karnataka, right? But also 8% GST is paid by the person who is earning or transacting this kind of a situation and is paying that kind of an idea. The question is, who should get the tax money? Should the tax money be given to the state of Uttar Pradesh 8%? मतलब उत्तर प्रदेश की सरकार के हाथ में आना चाहिए या फिर कर्नाटका की सरकार में आना चाहिए, राइट? नाउ दिस इज द पॉइंट ओवर हियर. इफ यू टेक अ लुक एट दिस, प्री जीएसटी, मतलब दिस इज व्हाई जीएसटी वाज नोन एज अ वेरी वेरी सॉलिड रिफॉर्म. प्री जीएसटी कंजम्पशन बेस्ड टैक्सेस pre-GST consumption-based taxes in interstate trade were all charged in the state of consumption, but the state where consumption is happening, and were credited in the state of production. कंसोलिडेटेड फंड. प्लीज ध्यान दीजिएगा इस बात पे क्लास. प्री जीएसटी ये हुआ करता था, कंजम्पशन बेस्ड टैक्सेस इन इंटरस्टेट ट्रेड वर ऑल चार्ज इन द स्टेट ऑफ कंजम्पशन. दैट इज ट्रू, दैट द person sitting in Uttar Pradesh is the one who is going to pay the goods and services taxes, right? The state in which the, what you can say, the consumption is happening, that person of that state will pay the tax. True, understand, okay? But also the money which was, let's say for example, if you take a look at the transaction of the state of Uttar Pradesh and Karnataka in this sense, and then we'll see what reform that GST actually bring about. If Karnataka and Uttar Pradesh are like two, let's say, what you can say point in demand and supply, Karnataka and Uttar Pradesh. If these are two, if this is the demand and supply equation, okay, Karnataka is the producer and Uttar Pradesh is the consumer. Okay, now for example, let's say if Karnataka is selling a commodity to Uttar Pradesh, right? This is leading to a transaction in which Uttar Pradesh is giving the money to Karnataka. So Karnataka is earning the income, Uttar Pradesh is getting the value in return. This is a kind of a, think of it like an import and export between two states, right? Karnataka is giving the value, Uttar Pradesh is giving the currency, the money. Okay. But the question also is that for this value, there is a kind of a taxation which has to also be paid, 8%. And pre-GST, what used to happen, that all this taxation went to the state of Karnataka. Taxation on consumption went to the producer state. Taxation on consumption went to the producer state. This is what basically we understand as to what happens pre-GST. Okay, right? This is the situation of indirect taxes or consumption-based taxes is pre-GST. What did the GST change? Now take a look at this very simply. 101st Constitution Amendment Act 2016 was initiated as a reform. It's the greatest tax reform that India had ever seen, and the most substantial, what you can say, the more substantial activity which underwent change by the 101st Constitution Amendment Act with GST was that consumption-based taxes in interstate trade were all charged in the destination state but now were not credited in the destination state but credited with the government of India. And was redistributed among the states according to the recommendations of the constitutional body known as the GST Council. Class, I hope you get a sense of what I'm trying to say over here. Please read what is written over here. Please quickly take a look at it. Tell me if you understand what is being said over here. Class, please see if you can get a sense of what I'm saying. Class, this is what is the reform that was brought about by the goods and services taxes. In a way, I am indicating before you the entire language of Article 269A. Article 269A is what we're taking a look at. Please take a look at this if you can get a sense of this clearly. Indirect taxes that are charged in interstate trade and commerce, they became, this was the greatest reform which was brought about by the GST. Okay, now take a look at this very simply. If a money is coming There's no financial committee. What is the finance? No. Yes, that's the point. For direct taxes, you have the finance commission. For indirect taxes, you have the GST council. It's a very good point. For direct taxes, you have the finance commission because most of the taxes which are coming to the union list are direct taxes only. So the direct taxes are generally dealt by finance commission. For the indirect taxes, you don't have to go to the finance commission. It is to the GST council. So you can very clearly think about it like this, that the finance commission is the GST council for the indirect taxes. That's something that you can take a look at in terms of getting a sense of what we are explaining over here. Now think about it like this. What did GST change is a question. 2016, for 101st Constitution Amendment Act, when this Constitution Amendment Act was initiated, it was a midnight session of the parliament, and the prime minister at the time had hailed the GST as the biggest economic reform since independence, right? Even overcoming the liberalization, privatization, and globalization reforms is what the prime minister claimed. Okay. Now, if you take a look at this, let's say, for instance, what is it that the GST changes? If, for example, Karnataka is selling to Uttar Pradesh, Karnataka is a high producer state which has a lot of productivity with itself. Uttar Pradesh is a low production state but a high consumption state because it has a lot of population with itself. So you're getting two elements of a market, a producer and a consumer, a supply and a demand. Now, if state of Karnataka is selling to the state of Uttar Pradesh, the income is coming back to the state of Karnataka. That's correct. But also previously, the indirect tax was a reward for people to produce higher and higher, right? So the indirect tax was retained by the states which were higher in terms of production. The states which had higher production, those were the ones who were able to retain the indirect taxes. Okay, Karnataka would take 8 rupees also and put it in its consolidated fund and then invest it within Karnataka. That's basically what the states were doing, the pre-GST. After the introduction of the GST, the government of India, the Union of India came in picture, and it made certain amendments to the constitution. And the Union of India said that all those taxes which are paid in interstate trade and commerce, okay, all the taxes which are paid in interstate trade and commerce, those taxes are supposed to be charged not by the states in which the consumption is happening, not by the states which are producing, but by the Union of India. So Union of India in a way intermediated between Karnataka and Uttar Pradesh and said that this 8% indirect tax upon sale is going to come to a fund created by me, the union government, and this fund is going to be regulated and monitored by a committee created by the union government and the states, which is known as a GST Council. Article 279 of the Constitution creates the constitutional body of GST Council by the 101st Constitution Amendment Act. And the creation of the GST Council allows for the union government and the states' chief ministers sitting at a council in which whether 8% is going to Uttar Pradesh or 8% is going to Karnataka will not be decided, or in fact, the money will not be divided between Karnataka and Uttar Pradesh. It would be taken by the government of India under the GST Council, and the GST Council would then recommend how this tax pool of money which has been collected on GST which is made for inter-services trade and commerce going to work out. You see the point? The change would lead to lower production by states, perhaps, but also, don't you think that the change would lead to a higher production by the other states? And if I am paying the income tax, if I am paying the consumption tax of a particular object, right? Okay, I am paying the price for the Nariyal Pani, 100 rupees, I am giving it to Karnataka. But I am also paying a tax on the consumption, right? Now, at least the tax on the consumption should stay in my state. Okay, don't give it to me, but give it to my state so that more infrastructure, etc., can be created in my state, that I also can jump into the production spectrum. After all, it is my money. I have earned the state in money in this state. This money, which I am paying as 8% tax to the state of Karnataka, why should it not stay in my state? Is the question that the northern states starting asking the southern states. And therefore, the question, therefore, is slightly deeper in terms of understanding the fact that the union government said that ये जो states के बीच में परेशानी चल रही है GST को लेके, मतलब indirect taxes को लेके, कि consumption destination पे होना चाहिए या फिर production source पे होना चाहिए GST का crediting. So this was the decision taken by the union government, and the union government decided that the GST is going to be submitted into a common pool, and that pool is going to be governed by a GST council, which will have members from all states and the union government, and they will decide what is going to be the way in which this money is going to be distributed. So in a GST, the finance commission, for example, like a finance commission body, was created for the indirect taxes, and these indirect taxes are going to be coming to the government of India, and then these indirect taxes are going to have the ability to be distributed among different states as per the formulations of the GST council. And these indirect taxes we are talking about on materials which are moving from one state to another, and the question is, which of the following two states is going to charge tax upon the consumption which has been made upon a particular thing?